All right, I'll call the meeting to order at 7:03. 5:03, I'm sorry, 5:03. This is a workshop for our proposed 2022 budget year, and Clerk Berry, call the roll.
Supervisor Hurston.
Here.
Treasurer Elliott. Here. Trustee Vosberg. Here. Trustee Anderson. Here. Trustee Demink.
He said he could not make the meeting, and Trustee Joseph is running late. He said he'd be here shortly.
And Clerk Berry is here. We do have quorum.
Thank you. I'll open the discussion up or the presentation up for our budget, our proposed budget. First of all, I'd like to thank everyone for their participation, particularly the department heads. I'd like to particularly thank Jonathan and what he's done to develop. I understand that this is a change in somewhat evolution of what had started 2 years ago to where we're at today. Jonathan's put a lot of work in from planning to get us to this point. Also, Vicki and the finance department for the presentation of what you see in front of you today. And this is another step in a continued development of how we will present our budgets moving forward in at least this year and next year. This is the first look. This is the first public exposure of the proposed budget for the township. The total budget, I will turn over to Vicki for her presentation, and then we will entertain questions and public comments after each department head or Vicki has indicated that we covered all the necessary territory in the budget. So with that, Treasurer Bauer, please go ahead.
Alrighty, so the first thing we're gonna do is just kind of go over what's in the book, like where everything is and kind of how to find stuff. And then we'll actually kind of get into the slideshow presentation and then kind of go, like Brad was saying, go over the actual questions that you guys have. So everybody was presented with a book. In the book, you have some tabs. Your first area will be the presentation, which I will get to after we go through kind of like where everything is in the book. So this is gonna be our presentation that we'll go over. The second tab, the first actual tab, it says General Fund. In that, what you will see is every fund has a tab. And I have it on the screen so everybody can see it a little bit larger, and then obviously the public can see it. But you'll have, for the fund, you'll have 5 years worth of history in this like salmon-y color. You have the current 21 budget with amendments. Then it's pretty up to date. It's as of the 5th, so actual activity through the 5th. And then we have 3 years of projections. With the 22, we show 3 years, but really the board approves the 1 year. So they're going to be looking to approve the 2022 projected amounts. Something else that's changed a little bit in this, just again with the structure, at the bottom of each page or each fund, I used to do a fund balance on a separate page, but what we did was incorporate the fund balance in with these, so you can actually see at the bottom, you know, beginning fund balance. So in 2016, you know, we started with 11.4 in fund balance. There was a loss that year, and then our ending fund balance. So fund balance is actually within each tab. Now you'll also see we did something, we used to do this per page, we've kind of condensed it down to give everybody a little bit more detail. So if you're still in your first tab, your first area for general fund, and there's actually off to the side kind of a little flag. And that's separating the difference between the budget that we're looking at and like the analysis or the history of it. So for most things in here, if you're like, okay, why did, you know, IT want this in supplies? You can actually look under the budget analysis and see the breakout of what makes up that particular line item. So in each fund, you will have that. And then we'll get to it, but briefly, so you have general fund, public safety, building, leisure services, Brandenburg, and water and sewer. And then again, we'll get to the last two tabs, which is your capital improvement and your full-time employees. All right. So I'm going to start the slideshow now. So welcome to the 22 proposed budget. The budget calendar, which is in our budget yearly workbook. The reason why I wanted to talk about this a little bit is to kind of talk about where we are right now. On October 22nd, the board and all department heads were sent a digital copy of the budget. Department heads had seen it, if you kind of back up a little bit, you know, they put everything together. We've had meetings both with the department head and finance, and then again with the department head's finance and the supervisor's office. And our deputy supervisor was with most of those meetings also. So there has been, to this point, quite a few meetings. I also opened it up like we do every year to the board. So if any board member says, you know what, I just want some one-on-one time, I really don't understand something, we're open to scheduling something for them to come in, spend as much time as they need, and we can even talk ahead of time, because let's say, you know what, they really want to understand, you know, public safety a little bit more in the administration area. So then I would schedule it with the department head, public safety, myself, and the board member. So just so everybody knows that there's more opportunities for us to really get into the budget as much as any board member would like. So they're super comfortable with where we're at. And then after this, we have the 18th meeting that we will go over anything that comes up, and then hopefully this goes to the first meeting in December for approval. So like every year, we have 6 budgeted funds: general fund, public safety, building, parks and rec. I know this is becoming, you know, a lot of you guys could recite this part yourselves. These are our modified accrual accounts. What that means is in these 4 funds, and we'll look at it in a little bit, though our capital assets are actually budgeted within these 4 funds. These other 2 funds, which is Brandenburg and water and sewer, are full accrual accounts, enterprise funds, and they have depreciation within their accounts, which is budgeted accordingly, but they don't budget for their capital. We do have in the capital plan what, you know, is projected to be spent, so it's all in here and very clear to understand. But I just want to point out that there's definitely a difference, especially with fixed assets, between these 4 funds and these 2 funds. And I also usually this is kind of farther back, but I know that there's been some questions on this a little bit, so I wanted to really highlight that the board is approving the budget based on the department level. We absolutely go through and give a greater transparency to say, okay, this is where we think it's going to kind of be broken out at, but that's really just for a guideline and to make sure everybody's kind of has a clear understanding of why they're asking for the total department amount, but the board is adopting it based on department total, excuse me. All right, so this is just kind of really high level. Our 6 funds that we just talked about, the revenues and expenditures for those. We have about $42 million worth of expense this year. Our general fund operating millage is 0.7624, and it's reduced a little bit because of the Headley rollback from prior year. And then our public safety special assessment, which the board is all aware, did that in the summer, and it's at the 7.95. All right, so again, this high level, this is our general fund. And you know, the numbers change a little bit from year to year, but primarily there's gonna be some facts that you're always gonna see. You're always gonna see the biggest chunk of general fund is our state shared revenue, followed by our tax collections, and third is our franchise fees. So on the second one, which is our tax collection fund, this is kind of just a history of where we're at. You can see that it's slowly increasing, but from year to year, you don't see like wild swings. It's kind of on its trajectory. Moving to our general fund expenditures. General fund pays for the majority of all the different funds. Here is the pie with all of them. The biggest one is our general administration. In our general administration, you have stuff like employee benefits for general fund. You have followed by, at 15%, followed by the general administration's 20%, you have F&O. Then would be IT at 10% with highway, streets, and bridges at 10%. This year, this is a little bit bigger because we budgeted in some capital for the highway, streets, and bridges, the sidewalk matches, which we can look at in a little while. So that's higher than what we would see in the past. And then next would be our leisure services, youth center. I've kind of grouped them together for this presentation because they really are serving similar purposes under the same department head. All right, so our public safety revenue. This guy here, again, looks a lot like it has in the past. The vast majority of our money comes from tax collections. This next year, you'll see in the budget, we have some, sales of fixed assets, and then like our wireless 911, our dispatch services at 1%, and then everything else kind of just is put together because they're really, really small line items in this other category. Public safety fund expenditures. All right, so we have 5 departments in our public safety fund. We have the administration, we have fire, dispatch, fire equipment, and police. Police, as you can see, is our largest at 59%, followed by fire at 22%. Our building fund revenue, building department gets pretty much all of its revenue other than 2%, so 98% of its revenue from permits. I mean, that's the purpose of the fund, and as you can see, that carries through to what comes in through revenue. Building fund expenditures, 91% is employee costs, followed by just some, a miscellaneous 9% of like other bonds and insurance, building lease, and the fixed asset. This is what you would expect to see in a service industry. I mean, we don't make widgets. What we sell is our service. And so in an industry like that, you would expect that the percentage from employee costs to be high. All right, so that's this first chunk that we had talked about. I'm going to go and flip over. So the last page in that first area is our notes and assumptions. A, it's a good place for you guys to take notes, but B, there's a lot of things as we're talking. I mean, it's an ever-changing budget. It's an ever-changing working document. And as things come out, we have different assumptions or things that come out and change that we might not know today. So I make note of, like, here's some things that at the time when we were creating the budget, those are things that assumptions we made. So to go over those quickly, the Anchor Bay Pump Station repair is not included in this. That would be the revenue for the SAD and the expense. For 22, it's not in there. There is a new program to lease vehicles that is included in the budget. The sale and lease costs are estimated costs, so obviously that when we actually go down and sign agreements and actually go to sell the vehicles, the price will be different. So there's inherently estimates within all of these budgeted type numbers. The SAD sidewalk costs are not included in the budget. So there's 2 pieces when we're doing these SADs. There's the township portion, which is included in the budget. That's in the highway, streets, and bridges category. And there's the portion that we will assess and pass on to the residents or consumer. The part that we will be passing on of that SAD is not included in here because they were still, at the time that we were doing this, working on assessing the different sidewalks and really getting an idea in here. but we wanted to capture what we thought the township cost would be on the hook for. So that is in here. There is an assumed wage increase of 2% for 23 and 24. Again, we're only approving the budget for 22, and the contracts are settled for that year. So you're not really approving anything for 23, 24, but just to know, like, okay, what kind of inflationary numbers are you guys including in this? The ARPA fund, the next one is the ARPA funds. The determination of what we're gonna be spending the money on and the corresponding revenue and expense is not in here. So if it's spent in general fund, then it would be a revenue for general fund, similar to water and sewer. It will follow where the project is coming out of, because those determinations have not been made yet. They are not in the budget. Additionally, when you get cash from a grant, so everybody's receiving half of their ARPA funds, it's not really a revenue until you have done the required rules that the grant has laid out. So if it says you have to spend the money on project X, if you haven't spent the money on project X, it's really not a revenue, it's a deferred revenue, so it wouldn't be in the budget anyways. So it makes sense to, at this point, not include it in there until some more decisions have been made, and then we will amend accordingly. The revenue sharing distribution rate is 98.75. We now have the census, so we have that updated number, and then I actually go to the state's website and see what they've been paying us, what the history has been, and the state actually projects what they think we should be getting. And so we use, I mean, they're the most expert piece of this, so we use what they lay out for us. So that's what is in here. Currently, there is no interfund service transfer in the budget. Now, that's also the new term that we use for our general administration costs. We have spiffed it up a little bit and used that terminology. It was something that we will talk about in a little bit, but as it sits right now, it's not in here. And then lastly, 23, 24, we have a placeholder for some bonding revenue, which is included, but again, we're not approving the budget for that. I just want to make it known that you'll see like a large revenue type item that is a placeholder for if we bond for some larger projects like Anchor Bay Pump Station or something like that. Okay, so moving to general fund, I know that in today's presentation, the goal is to give kind of the brief overview and then see if there's any questions. We can answer questions today, and then of course we have the 18th to really, after everyone's had more time to digest everything, to take those on. So what I'm gonna do is actually, I'm gonna take the budget book, kind of flip to the end of it, and look at the capital improvement plan for a second. That is this guy here. And like Brad was already talking about, I really am happy with everything that Jonathan has done for this and put together. It is a rolling plan that is, we did it kind of mid-year this year because it was really our first year pulling everything together, and he did a lot of work with that, and then we had to incorporate it in all of our numbers. So, but next year, the plan is to do it earlier. We have 3 years in this schedule because it's a 3-year budget that we have. But you're going to see on that first page, which is also on the board here, what projects we have, what general ledger line items it's going to come out of, or it's projected to come out of, and what year we're planning on spending it. I will say something with the general ledger account number, something else we're doing for more transparency and tracking, and this is in flux until the budget gets approved. I'm not going to have the entire project line number set. So what it is your general fund number, and then attached to that, you're going to have a P and then 4 digits, saying, okay, this is project 1, project 2, and actually, as things are going into the general ledger, you're gonna be able to, we're gonna put it under this project code, and the department heads and board can pull up at any time how much cost got spent under a specific project. I'm really excited about that advancement too. I wanted to bring it up right now just because in here, we kind of started assuming project numbers, but until the budget is approved, and I know exactly, because, you know, it's a little bit in flux, until I know exactly what projects we're definitely gonna be doing, I will assign it, you know, after that's set. I don't know if, was there any questions, or did anybody want to go into this anymore for the actual capital, or was everybody kind of comfortable with everything I've said so far? I guess I just take a quick pause of life. All right, we have a talkative bunch. Really, it's just my lovely voice lulling you into a false sense of, no, I'm just kidding. Okay. Moving on. Okay, so that's our capital improvement plan. And again, you're gonna see some in the middle of it. You know, I've mentioned a couple times that highway, streets, and bridges, let's just tie one of them out. So in here, in the budget, under column N, on here, but it's the fiscal year 22 township costs, these will tie to the general ledger, our budget. So in our, let's go back to highways. Here we go. So you're gonna see in the in this line item for road maintenance, you have $400,000. That's the purple. So I guess another comment is we tried to kind of color code it for you a little bit. When it's in yellow, that usually represents that it ties to a contract. So it wasn't like we just said, hey, you know, we like this amount for salary. It's what the person currently is tying to their contract. And what the purple does is actually saying, you know what, we have tied this to a capital plan. And so right in here, you can see this one has, I'm gonna move this over a little bit, too much. This one has 400,000 in it, and then this one has, for zone 1, 200, and zone 2, 100. If I go to that capital plan, you're gonna see the amounts in here. So these tie, in all cases, to the budget. Now, if a person buys something that's $5,000 or $6,000, that isn't like our capital plan is 20,000, but our GASB, you can have smaller things in here that add up to it. So if something doesn't add up, because this is a little, our general ledger is a little bit higher, it's because you have an item in there that is capital in nature but doesn't hit the capital plan. But again, questions, let me know. There's always something behind why we did what we did. And then for those yellow items, what you're gonna be able to see if you kind of go to that next, the last tab in our budget book is our full-time employees list. Another thing, we've been doing this, I think for 3 years now, but it's just amazing to be able to do. It kind of gets everybody on the same page. During the budget cycle, if a department head has a request or any kind of issue with their staffing, they talk to Human Resources. Human Resources assesses everything, communicates with, you know, the supervisor and whatnot, and puts together the plan for that following year. So then the HR sends us the list, we go through it, make sure we're tying everything out, we send it back and forth several times, just to make sure that, again, everybody is on the same page with it, and then that is what we budget the numbers for that's in yellow. So when you look at, and I can kind of tie one of those through for you also, but when you look at engineering and you say, okay, how many bodies are in engineering, and you go to the engineering tab, or the engineering section, you're gonna see that for the proposed 22 budget, there's 2 bodies that tie to what's in engineering. So same thing with public safety. you have a breakout of what's in their administration.
Did the inspectors go back to water and sewer?
Correct.
Okay.
So they're still under, and under the budget, they're still gonna be reporting the same way, but budget-wise, because of the majority of their work was water and sewer, that's where it was coming out of.
Okay.
All right. So at this point, I'd like to get some direction on what you guys would like to either get into a little bit more. The one other thing that I definitely do want to talk about, what we can talk about at any point, is kind of going over that administrative cross charges. I have the schedule on what we used to do. Again, we currently have nothing in there, but I can spend some time on that too. So is there any questions or anything anybody, this is gonna be the shortest budget ever. Which, yeah, I can talk about it right now. Is there, okay, yeah, you know what, actually, Michelle had mentioned, turn your mic on, so then, because they're recording everything. So let me just, the nice thing about what we have going on here is I can make changes to what we're looking at. Right now, a lot of these schedules all tie to different schedules. Right now, this is our administration fee area. You'll see that there is nothing in it. I can put anything in here and it automatically updates the different funds just by this. So right now we have nothing. I know that in talking with Brad, he really liked the idea, and I'm paraphrasing, so correct me, but giving options to the board, making sure everybody's educated on the different available things. I know that there was some different requests with, not having anything versus having something, so we can go into that a little bit more.
So Vicki was asked at the beginning of the year, knowing the history, that administrative fees has always been a topic of discussion, to prepare herself so we can have the discussion either way to show or reflect or demonstrate what the impact is with or without administrative fees applied to each department. There are specific rules that Vicki's relayed that if you do to one, you have to do to all. And she can be very specific as to the cost of what it impacts at removing that to each individual department. So the model is both ways. It's really going to be left up to the board to decide and for discussions. And again, tonight was really just the rollout of what it looks like. We've got a couple of weeks to sit down and decide and discuss and dig deeper if you so choose. Trustee Joseph is in the room.
So as a follow-up to that, and if you're getting into this later, I'll wait till later. Are you?
I can do it right now.
All right, so I understand it's an all or nothing. So what impact would that make if we did charge it to each department like we have been, or each cost center?
Okay, so I'm gonna step back for a second and kind of do what we've historically, kind of show you what we've historically looked at with the general administration fees or the internal service fund charges. So there's a lot of different ways to do it. Essentially what we're trying to do is a cost-benefit analysis of how much does general fund do on behalf of other funds. And when we do this, I can kind of show you some of the different tabs that go into it, but we do it on a global percentage, and we talk to the different departments on what they think would be appropriate for what their people do. So let me just go into it because it makes a lot more sense. All right, so what I have here, this is kind of the condensed version of my other tabs, or the kind of the summation of it. You have our employee costs for a group. Right now I have general administration, clerks, engineering, F&O, finance, HR, IT, supervisors, and treasurers. You are not allowed to include board members in this cost. A lot of times what you would see is not only the cost of the group, the person, but you would see, overhead for the building. So in this calculation, we did not include, you know, like the treasurer's office, that you could go through and say, okay, what is the electricity for running it, and you could put that in there. You could put, I've seen some places do the assessing department because, you know, public safety uses, you know, needs the assessments and whatnot. We did not include any of that stuff. And then we also did not include, so we didn't include the overhead, but we also didn't include like direct vendor payments, and I can kind of talk about that. So essentially, we went through and said, okay, we have a nice schedule here on the different employees that go into the different departments. It sums up to, you know, here's our people, but what percentage goes into each fund? And so what a lot of departments do, or a lot of municipals do, is they'll take some sort of cost allocation. Here is one that we use. This is a very, very common one. You know, the expenses sometimes follow the workload. So what we did in this case is we said, okay, here's the revenues for a full year, our last full year for 2020, our expenses and our full-time employees for 2020. And then I did like, this is the average, and this is like the weighted average. So if you take all three of those and you say, okay, if I have all these different things on, you know, people causing workload and revenues, expenses, it's the average weighted percent. So what we then did was we talked to each department. And like, I'm gonna use F&O for example. This was last year that they did kind of more of an analysis of the individuals. And we said, okay, by person, how much do you think the person spends in general fund, public safety, DPW, and building? So either a estimate of their percentage was used, or a calculation based on some sort of factual data behind it was used. So then the next thing was we took a weighted average of those. We said, okay, of all of them, if we went through and calculated and put everything together, how much of, you know, the administrative time goes to general fund, public safety, DPW, and that's what you'll see here. And we get down to, if you add all those up, we get down to, you know, 3.2 million or 1.7 million that would be spread among the other three funds. What we then said was, we're gonna write off some of it. Like, we're gonna say, you know what, we're not gonna charge for what their full cost would be. We're only gonna charge 45% of that. So, and historically, that's been a comfortable place that the board sat. Again, this can be, you know, there's been people that say, you know, we want absolute direct cost of everything, and then we've had people say, you know, we don't want anything to be in there. So you have a wide variety. I am comfortable with saying these are the people that work on behalf of all the different departments. The department heads have, you know, weighed in on where they feel like they're spending their time. We take, you know, like some calculations to back that up, and then we say, you know what, we also are going to take 65% of it and have that all absorbed by general fund. So in the past, what I would have done was said, okay, this is what we're going to use for the administrative costs between the general fund and the other funds. So that would be a positive, you know, another inflow for general fund of about $598,000. Getting into when I was talking about these vendor costs, here is a list of some of our vendor costs. This is not all inclusive, but it just kind of proves the point. Like General Code, Civic Plus, a lot of these different like BS&A, we're spending like in the budget, there's like $300 and some thousand to update all of BS&A. Well, BS&A, you know, services all of the different funds. We could go through and say, okay, what's the percentage of use that the other funds get, and general fund wouldn't, you know, absorb all of that cost. Right now, we don't have that in the administration fee part. We say general fund just pays for that as part of its service to the other fund. So any of the vendor type stuff that would be kind of allocated out in this list, general fund just pays. Any questions on that? For this, no. I mean, I have more supporting stuff, but it just kind of gets into the weeds. So both are legal to do. Both have a methodology behind it. I will say that what I typically see at municipals is having some sort of a calculation that says what would be a reasonable amount to charge. You can say that the general fund, because it's like your parent company, can cover the cost for the children. So it's really at the board's discretion on what we want to do. I know that a lot of municipals that do it, the objective is to try to say if this fund was on its own, what would the cost be? And so that's what it's trying to pay for. And we know by looking at the calculation, to have all of the different services and vendor costs, you're not going to come up with, you're not going to be able to buy, like the building department's not going to be able to buy all of its payroll, administration, F&O, all of that for $56,000. So it's definitely a defensible number if someone were to say, okay, that's too high. I mean, like we have a lot of write-off that we do not charge. But again, it's a board preference.
Sorry. So I don't think, when's the last time that not including that has been in the budget? Has been the way that we budgeted here?
This is our first year that we have shown it not in the budget. This is the first year that we did.
Okay. I mean, that's, to me, that's what's one of the big things we have to, we can look at dollar amounts of other things, but in the end, we need to decide what way we're going to go on that.
Well, and again, that, it definitely goes into, at the bottom line for 22, because one of the questions kind of that you asked was, well, what's the impact then, right? So if you look at the bottom for 2022 for general fund, you know, we have a loss of $2,500,000 projected in general fund. Our fund balance going in is $7 million. By that loss, you would have $4 million at the end of it. So it just depends on where you want to spend your dollars. I mean,
one more thing, and then I'll let some other people talk. Where we're going to spend the dollars is this whole thing. How we want it to look at the end, and do we want the children to participate? You know, we're trying to, I mean, you used the family analogy. Do we want them to participate or not?
right.
Dr. Bauer, can you show us it's page 2 of 10? It shows the interfund service transfer at the top of that page. Can we see the historical on the screen, please?
Mm-hmm. Sorry, I gotta scroll up here. Okay. So you can see that it's been around that $500,000 mark. Last year, what we did, and I'm gonna try to, we started to take actual costs from other departments and move it into the administration fee. So it was having general fund pay for more things instead of having it spread out. So this year, we have a budget of $800,000, but it was picking up direct costs for like the engineers for water and sewer. And instead, we said, you know what, we might be getting rid of the administration fee altogether. So when there's a direct cost that really is directly linked to a fund, it only makes sense to make sure that we're charging it to that fund. And therefore, we are now leaving the allocation type costs or wages to be under debate. So we're at the same level, about that 500,000, 600,000 mark as we've been for the last 5 years, with the exclusion of what I was talking about this year.
So what would be the projected 2022 amount if nothing changed from 2021?
So if nothing changed and I was doing it, the revenue coming in would be 598,000. So.
And where does that revenue come from?
It would come, hold on one second. Just gonna stick it here for a second. It would come from public safety at 260,000, DPW at 282,000, and building at 56,000.
So this is the standard methodology that we've used historically up until this conversation today.
That's correct.
And so all decisions that have been made prior have been based on that accounting methodology, is that correct?
That's correct.
Thank you.
So I'm plunking in here right now, rounded for the simplicity's sake, but you can see that what would happen is general fund, loss would be about $600,000 less, and it would go down to a loss of 1.9, but then the corresponding expense would be shown in the different funds. And again, I mean, that's really the board's discretion.
Any more questions? Any more questions? Speak freely.
Okay. So the questions that you had about methodology and so forth, this has been a hotly contested. Administrative fees have been part of every budget since I've been on the board. This is like the ninth year. You know, we've talked about the administrative fees, and I appreciate the parent-child, you know, analogy and the family, but the difficulty that I have and have consistently had is the revenue, tax revenue that the general fund brings in is roughly 1.4 somewhere, and then we have state revenue sharing that makes up the rest. But the administrative fees are over a third of the general fund revenue in comparison to the taxes. So it is taking public safety dollars, and I'm assuming in DPW you're incorporating some of your what would otherwise go to the enterprise fund type monies for the cost of doing business. So I'm curious to know from the department heads, and when we've looked at it previously, the police department, the fire department, the grass is cut, the building is maintained, those are general fund expenses. Those are incorporated in their administrative fees. What if they had their $300K and they maintained their own building? They did their own payroll, and as we have things like BS&A, you know, to substantiate the amount of work that's done by DPW, they go from a billing standpoint. So if there's work done, then the department that benefits from the work being done, you go on a fee for service. And if we're tracking our projects, that becomes a little bit easier. So the earlier presentation where you were talking about maybe it's not feasible for building to go out and purchase $56,000 worth of administrative fees independent of their, so it's cost effective to, utilize the administrative fees. Those services are provided by the general fund, and then it's taken from building. But what about the other two budgets where you have close to $300,000? And do those department heads have an opinion? Because it would be very helpful to understand what it is that is really coming out of their budget for services. That's what these administrative fees revolve around every year, and we just, again, the department heads, and have the department heads weighed in, and I'm sorry, this is like your interim, but, something that we've discussed for many years. What is the position of the two biggest department heads that are, being hit for $300K? regarding the services that are provided. And is that an appropriate charge?
It's always been a point of contention, and in this new role, that's what I asked Vicky to look at and see what the impact is across the board for every department.
Yeah.
Speaking from the public safety side, the amount of money that we pay, there's some elements of the capital projects that that money could have been used for, could be used for. In the new role, you see the impact on the capital, on the general fund. So I'm playing with both sides. I see both sides of them now. But it would be nice to, if I'm the public safety director, I'm fighting for every penny I got.
Of course.
And I want to keep it.
Yeah.
And I want to keep it in-house. Water and sewer, I'm not sure, Kevin, I'm not sure how it impacts you guys directly on a day-to-day basis, but I'm going to assume that it's the same role. You want to keep it in-house and allows you some leeway to operate internally. The bigger picture of the general fund and the knowledge now that I've got with some sewer projects and some growth plans, it puts a twist to it, to be honest with you.
Well, I guess the other thing that I'd like to know, as we've talked about this in the past, is this idea that if you apply the administrative fees to one department, then you apply them to them all. But really, we don't do that. We're only applying it to the departments that have a revenue stream outside of, in public safety, we're talking about the S&D, the water department, we're talking about actual water bill and the regular surcharge, all of the things associated with water and sewer. And then in building, I'm assuming you're talking about the revenue that's generated from permits and things like that, whatever revenue they have. But if you're going to apply that same logic, Brandenburg loses money every year, but they have a gate revenue. So you had Ed did the presentation where she talked about the gate and that's revenue, but it costs you money to get that revenue. Why don't we assess an administrative fee through Parks and Rec or through any of the other?
We do, so Parks and Recs does have an administration fee. It's covered within the general fund, though. So you do have, it's did a quick calculation, it's 7%, if you included it in here, it would be 7% of the total revenue. And if you look at personnel costs, for example, and you're trying to, and a lot of these costs are associated with personnel, right? It is assigned to every fund, not department, fund that has personnel with it. So 508 does, most of their personnel stuff comes out of general fund. So there's not an additional fee to 508 because it's covered within general funds, Parks and Rec.
Would it be fair to say that what makes a department not a general fund department is if they have an independent funding source?
There's a couple things that go into that, like a department that would be charged for administration type fees would be like an independent department that has a department head, that has the funding source, that has personnel associated with it. There's, I mean, I don't know if.
Enterprise.
Yeah.
That's the key word. If it's an enterprise, has a self-balancing set of revenues and expenditures enacts under state law, for example, in water and sewer, to provide a specific commodity-based service or a service that can be regulated or managed.
Well,
Vicki, you want to talk about the direct charge thought process? Basically a user fee, we've discussed that also.
So there's, again, a lot of different ways to break it down. You can go through and it's cost benefit, right? You could go through and say, all right, when I'm working on something, and I'm just gonna go to another extreme of it, you have HR that's working on his day, and you could say, okay, well, today I had a meeting with public safety, so I'm gonna have, a chargeable rate, and the amount of hours that I've worked with public safety, I'm gonna directly charge them for my services. We have not done that in the past, one, because I think that in looking at it, the funds would end up paying more money, but additionally, the amount of time it would take to track it, but you can do that. There are places that go through and, You know, when I worked at Plant Moran, for example, we actually did more of a direct charge where I would, every 15 minutes that I worked, I'd record who I was working on. So that's definitely another methodology.
Well, last comment I had, just from a historical perspective, going back to Supervisor Ellis, when the idea of utilizing police SAD money was floated out there, and you know, he's been pretty outspoken about it, and I'm sure he shared this with you. The ability to pay general fund employees when the general fund was at a, you know, dangerous low, it was perfectly legal to take SAD money and pay what was then considered general fund employees for supportive, you know, services or the administrative services. It became a mechanism to, you know, kind of keep people, you know, employed and able to function legally. And then it, I don't know what happened, but it seems to have grown, like, to the point that we were contemplating police layoffs, and you had hundreds of thousands of dollars in administrative fees, and you go, well, wait a minute, if we got a cut, like, do we want to take, you know, figuratively speaking, but boots out of the off the street so that we could pay, you know, like administrative fees, and those were real transferable line items, you know, so you could have 2 officers that might be laid off, but for the administrative fees. So there's a problem. With that very high dollar amount, and again, you got two departments that are $600K into the administrative fees, and to say, like, that's only represents 35% because we forego the other 65%. I'd like to see the time studies associated with that, and if you put, you know, Chief Frank's in charge of his budget, and you said, I got 3 police officers that are going to go to administrative fees, or you can keep in your department what you can save and get the job done, I bet you're going to be a little more, you know, sharpened pencil when it comes to those types of services. And I think he'll be able to get payroll done and a number, not all of it, but I think he could do it, and I'm curious to see what Kevin has to say as well. But again, that's not, I don't want to put you on the spot. I'm
No,
just, you
no,
know,
not at all. I
like
appreciate
something to
it.
think about as we formulate, because it's been a source of real
Yep.
division on the board, and I appreciate you breaking it out this way, just to at least facilitate a discussion about what it looks like in both ways.
Yeah.
So I know for us, there's always the conversation of, with Treasury doing our water bills, doing all that work is, I guess it's a philosophy, is if they're doing that work for us, do we get charged for that? Is that considered a general fund function for doing that work? So I don't know. I can kind of see both ways of us paying for it or not, because if they are doing the work for us, having to hire more employees to actually do that work, I mean, we would eat that cost of $300,000 up pretty quick between doing that, doing accounting. So I can kind of see both ways. In my opinion, I don't necessarily have a problem with the 260. Like Brad said, I don't mind having the money. Obviously, the more money for me, the better. If it's zero, but I can understand the logic of paying for it, because Treasurer's doing our work. We have accounting doing a lot of our work. You know, working with Josh is doing a lot for us. So I can see how it can be spread amongst, and that cost would be incurred by us.
And again, just to go back, and being on that argument where you're at and presenting now, and I know the history, and you're right. What I wanted to do tonight, and what I had asked Vicki to do, was do exactly what, again, you had mentioned. Let's look at it, see what it is, see what the cost is across the board, see what the impact is on the general fund. It's gonna be $600,000. And although we don't have to have answers tonight, obviously, but to at least have a point of discussion to see what the impact is, and have Vicki demonstrate what the cost is across the board on both accounts. So, coming from a department head, I want all the money I can get.
Just to clarify, taking a look at the full-time employees, the public safety is adding 2 employees to the 2022 budget, is that correct? That's correct, okay. So this, this methodology is to understand the true cost of accounting, right? The true cost is you want to know how much it is to actually run your department in it. And I know that you use an employee base, but other municipalities take in, like you said, assessing and treasury, and they'll even talk about the cost of, say, the attorney, because your HR department, your HR, you know, handles your grievances, your assessing assesses, and the treasurer collects the taxes, and there's a lot of things that come in that many municipalities, and ours is actually a lot less than those municipalities that, in my research, as I'm looking around at different municipalities, I think we talked about that at some point in time as well. Is that correct, Vicki? Ours is a lot less because you don't take in a lot of those other costs that maybe some of those others municipalities do, such as assessing and the attorney and HR.
Yeah, no, I mean, there's definitely you're gonna find things all across the board. I do know that we don't charge everything that a lot of municipals do. However, I mean, just opening this up too, the nice way, the beauty of what Brad had us do here is I could go through, and if you're not comfortable with 65%, this is historically, he said, you know what, here, what's your baseline? This is my baseline that I would do, that the auditors have seen year after year. But we could go through and say, you know what, we really don't, we want to charge less, we want general fund to suck up more of the cost. I could say 70%. I could, you know, you can include as much or as little as you want, and I understand everybody's different thoughts on it, because there are people that would say, you know what, general fund is going to be the parent, and it's going to cover the cost of those, and there's going to be some that do that. Now, do I think that most of them, in my professional view of what I've seen, most of them do have the charge? Yeah, absolutely, they do have the charge. Do a lot of them, because we were talking about Clinton Townships, you know, are they a lot higher than ours? You know, that's the case, but we need to find what fits for us and what's comfortable. I'm at the pleasure of what the board wants to do. So if I'm telling you what I typically see, but if the board says, you know what, we're really comfortable with, you know, not having it in here, and that was where Brad said, you know what, let's start with just not including it, that's what we do. So again, this is what we've typically had in the past, if I were just to, you know, roll through it, but we can even change that write-off or that general fund portion to be higher or lower, so you guys are comfortable with what we're sitting at. Now, I have not done a recent, like, to get more specific, I haven't done a polling of a lot of them this year. I could do that if we said, you know what, hey, let's see what everybody else is doing, but I'd love to get what you guys are comfortable with.
Sorry, just when you say you're changing the multiplier, so at 65%, you're basing it on a 65% of what? And what is it? Are we collecting only 35% of what we believe the actual cost estimate is, or what does the 65 represent?
So if we went through, and let's just say, you know what, we hired an outside firm and said, okay, what's that cost? We would go through and do this exact thing, take all the different employees with all the different percentages, and of course we would do the overhead costs, and we would do all the different, like, vendor type costs. We would add all of that together. We're gonna, for this particular one, we're gonna say, okay, we're gonna ignore overhead, ignore the different vendor costs, and this is what we would charge based on the different department heads. So we would charge on this model, you know, public safety, $743,000. General fund is, and we keep getting back to this, is able to cover some of the costs that we deem would be related to another department. So what we're saying is, we don't want to charge, you know, the $1.7 million to the different funds. We want to charge less. We want general fund to take on more of the burden for these different funds. And again, it's taking on, you're already saying it's taking on some of the burden because we're not including the other stuff. So what has been comfortable in the past is, we said, nope, am I getting the right cell? We've said, we don't want DPW to pay $806,000. We're going to have general fund pick up $524,000 of what we, according to this model, say, would be a DPW cost, therefore, DPW would only pay $282,000.
I see. The 1.7, 35% of all of those listed services is what you're estimating 400 or 260,000, which would represent the 35% of the actual cost. So according to this chart, as you go down, and I'm sorry, I kind of stepped on your question, but I was thinking the same. So in the, say, in the column for public safety, where you're talking about the FTEs in the public safety, the 111,000 represents a proportional amount of the employees when compared to the rest of the township?
So, yeah, this is of the treasury employees, and then again, it actually ties back to multiple schedules here. So we have our treasurer's department, we have our listing out, we have what they make, and what each person, how they assign their time. And then, that flows to this. We don't include, in that number, we don't include, you know, like Kathy, even if she, let's say she does work for something. So we've taken some of the base employees, their cost, and then taken their costs and applied it to the different departments.
So just in the public safety, we have $219,000 actual costs of HR services. We have $96,000 of F&O related services. That's what that column represents.
Yes.
And you have a chart that goes through each employee that substantiates that dollar amount.
We have a chart, I have charts that would substantiate, and so, and again, part of that beauty of the write-off is there, if I were to take, I would have another about $1.2 million that I would need to add to this of vendor costs that general fund picks up. I also have, I mean, we've started getting into like measuring the building and all that other stuff. We have additional costs. We say, you know what, we're not putting those in there. We did a cost benefit of saying what, and again, if the board says like, hey, let's really get into it and we'll do a different methodology, but at this point, we did a methodology of what makes sense. We took out the vendor costs, we took out the overhead costs, we took some of the employees within the departments. We said, what is their cost? And then we went through, and I'll use payroll, right? So payroll, her time is spent per employee. So if I look at her particular line item, or that employee's particular line item, it's gonna go through and say, okay, let's go to the per department cost. You know, 30% of employees are general fund type employees. And so 30% technically of her time. So we tried to do, again, in a cost benefit, we didn't go through and say, you know what, F&O, mark down every single, you know, one that you did and how much, but they went through and they said, okay, this is of the time that we spend, this is where we believe that we spend it. So the different experts for the different departments weighed in on, like Treasury, for example, when we did this last year, Treasury went through and said, this is the services we provide, these are what these employees do, they spend about 60%, 20% of their time doing for each fund.
Yeah, so I guess the difficulty that I run into when we start looking at trying to right-size that number and figure out what it is, when you start asking about actual costs, you go, well, you got vendor costs and you got this, it would actually be, you know, 3 times higher, so this is kind of a good deal when you break it all down because we wave goodbye to 65%, but what ends up happening is, hate to keep using public safety, and I point to Chief Franks, but it was you for a long time. 300,000, you get now to you're going to be much more frugal with that, and you don't have to. You're not burdened with getting into another department and demanding to know what your service delivery was. So if you want to tighten the efficiencies on what those services are, put the person responsible for the budget of that department able to work with that capital. And if they look at the project on the front and they go, there's just no way I could duplicate all of these services for, you know, Kevin's weighed in. There's no way I could do, but I haven't heard it from public safety. And I'm, you know, like the counter to this would be somebody who says, hey, that $250,000, I could do a little bit more. And keep in mind, you're only paying 35% of the actual costs minus the vendors too. So it would be nice to have the feedback from the department head themselves. And in particular, the two biggest ones. And I guess, you know, I'd be hard pressed for a building to come up and figure out, you know, 56K with all of the various things. That's you know, almost impossible. Like it's a lot. But on the, you know, you're talking $250,000 in the other and 300,000, and, you know, that might be something that the department head could really provide some additional data, I guess, you know, some, thank you.
Any further comments, thoughts, questions?
No, I can print out that slide. I had it set so it's movable at this point, so if we wanted to go through and change anything, I can do that. But I can, before you leave today, I can print out some. Would you like to see it any other different percentages or anything like that, or is there anything else that would make you comfortable?
It stayed the same historically from a percentage standpoint. We've always based it on the whole roughly 65%.
Yeah.
The actual cost, so it's going to be proportional to that.
I have just one other comment then.
Please.
If that's something, changing that formula or eliminating it, whatever, right now it's totally eliminated. If we change the formula, whatever we do, I liked what Dave brought up about not everything's included in there. So if we're going to make a change, you have to look at everything, in my opinion. And I think there's a lot of services that were decided not to include, but they need to be included. Maybe they're not of that significant of an amount, but it would be something, in my opinion, that we would have to do before we would change how we do this. I think.
It'll be 3 times the amount of this plus vendors.
Right.
And then if that's an actual cost, and you look at, I'm curious, as you add all of these things in, like it's very, very close to the overall budget for all of the departments involved. You know, like it starts to get kind of interesting when you're talking about the general fund tax revenue of 1.4, and you're already at 35% of 1.7. It's going to be well over 4 million by the time we get done with vendor costs. And I don't even know that we have that many, you know, FTEs operating. It would be very interesting, because you're right, if this only represents 35%, you know, you got, the actual costs are really going to be quite, you know, eye-popping, I would imagine, so.
Especially because you may need to hire, if you're looking at it from, if I contracted for all my own services, you're gonna have to hire some experts that we have as department heads that perhaps you wouldn't, right now you have benefit of one department head
Sure.
serving everybody,
Yeah,
and you may need to get someone else to do some of that heavy lifting as well, so.
could be in a situation where you look at the numbers, they're big, and you go, we're only going to do part of it, because there are some areas where maybe you could see an instant savings, say on the maintenance of the building. You got a guy that, you know, with a riding lawnmower can take care of your grass cutting pretty efficiently. So, you know, like, is that, are there carve-outs for areas that are, you know, like real?
Right now, they're not being carved out, so
They're
that would
not.
be added
They're
to
all,
it.
they're all inclusive now, because you've already sort of lumped it in. Like, you already got a deal at 35%, so, you know, like, you can't pick and choose now.
Well, my understanding is, using the lawn mowing for an example, if their yard is being done by a contractor, it's not included anyway, is that correct?
Right. It's not
Right,
part
so
of the
that would
vendor.
add to,
Yeah,
all right,
yep.
thank you.
So with that being said, Vicki, you're available to work out the questions that may come your way offline or as a result of this
Absolutely.
meeting? the proportions, the multiplier can be worked either way based on requests to you. With that being said, I'll open the floor to public comments, and there is if there's nothing more being from department heads or elected officials. With that being said, I'll open it up to public comments and remind everyone that public comments, there's a 5-minute time limit. Public comments.
Paul Lafata, 48055 Mallard. With the administrative fees, I've done budgeting probably for about 37 years. Allocation by percentage, unless you do an actual, isn't very accurate. And I would really consider, when we're talking about large numbers and millions, that we look at somehow getting some logs out and looking at actuals, because I think we're misrepresenting what's being charged. If you look at our new BSNA software package that we just invested $270,000 plus some training, ADT is going to be gone. We've got our purchasing. There's a lot of good stuff that we should be getting in there to reduce the budget, and a lot of this is being reduced in the administrative part of it, because we're going to cut our purchasing time down, we're going to cut our payroll time down, we're cutting all this down, so we're going to reduce administrative costs. And we really don't know what they are. We have a big, we threw it all in there and we have a pot, but we don't know actually what's getting allocated to public safety or the sewer and water department. The other thing, you mentioned that the SAD for the sidewalk isn't going to be in the budget. I'm just curious, how does Spalding D. Decker get paid 25% out of the SAD funds for their services? Because I can't find out how that's going to work. I don't see any quotes from them. I don't see any paperwork on the line. There was no bids. And somehow they're going to pay 25% of the gross for what the SAD pays out. Thank you.
Thank you, sir. Any further public comments? Board comments. Trustee Vosberg? None? Trustee Joseph? Trustee Anderson? Treasurer Vosberg? Clerk Berry? None?
No.
No comments from myself. I'll take a motion to adjourn.
Motion to adjourn?
Motion to adjourn by Clerk Berry, support. All those in favor, say aye.
Aye.
Opposed? Well, meeting's adjourned, 6:16.